I've grown my real estate team from $2 million in revenue to $6 million net revenue run rate over the last 2 years. So in a really short amount of time. And I want to talk through today one thing that has been really hard to actually get used to is increasing budgets. So this is something that in the past has cost me tons of money for two major reasons we're going to talk about today. It has cost me money by spending too much. It's also cost me almost more money by not spending enough. So I'm going to walk through the process of how to figure out, make sure you're spending the right amount of money. And if you're new to this, my name is Christian Stubbs. I'm a team leader, owner of Onyx Homes. We're a real estate sales team based in Orange County, California, Southern California. And we have done over $750 million in sales volume and units in the last 6 years. And this is kind of my story. This podcast is specifically for team leaders, talking about my story of building Onyx Homes from start to finish. Now, the best way to get in the inside look at this is to join my email list. Link is going to be in the description below. So let's go ahead and dive into this. So the first part of understanding, like getting both emotionally and just financially used to spending more money, or spending the correct amount of money is probably a better way to put it, is when I understood margins. So for the first 2 years of my business, we spent an ungodly amount of money relative to our revenue. I was spending as much money this is 4 years ago now. For the first 2 years I was in business, I was spending as much money as I am right now with a $6 million a year business and revenue. So that is how far out of whack our spending was in the beginning, which no wonder we weren't profitable. And then it took a long time to fix that. So now we're running into a situation where I'm spending more money on things than I'm used to, right? I'm like, wow, we're really spending this much money on this thing. And the reality is the business is growing. So obviously expenses are going to go up. But here is how you manage your expenses going up. So the first thing is understanding margins in general. Now, I've made other videos going on margins, or other podcast episodes going on about margins earlier in the series. So I'm not going to go too much into detail. But if we're walking through this, the top line is, you have revenue, right? So you have 100% of that's revenue, right? So from there, the biggest expense we have in the business before we get to the biggest expense we have in the business isn't actually an expense. It's cost of goods sold. So this is what you pay your agents, what you pay your brokerage, what you pay in fees on deals, like transaction coordinating probably isn't really a fee, but cost of sales. So referral fees, right? So like if you're doing a deal and you have to pay Realtor.com or Zillow a referral fee, you have to pay your agent 50% of what's left. You have to pay your broker, whatever. Like all of that is cost of goods sold, right? So you have revenue and then minus cost of goods sold. And then from there, that leaves you with your gross margin, and that, or your gross profit or your gross margin, if we're talking in percentages, which we are. So from there, you have your operating expenses and your gross profit and your net profit, right? So you have revenue minus cost of goods sold, which is going to give you your gross margin or gross profit. And then from there, that leaves you with, you've got really two numbers to figure out. You've got how much operating expenses do you want to have, but the only way you really get to that is figuring out your profit margin. So on one of the earliest episodes of the podcast I was talking about, you have to understand your financial model. So our financial model is, our goal is a 10% profit margin, 10% of top line revenue. And here's our real numbers. So we have, if you're taking notes, maybe this would be helpful, but I'll put it on the screen if you're watching the video. So we have top line revenue. So then we have 63% of our deals get paid out in cost of goods sold. That's referral fees and agent splits and broker split, everything else, right? So 100% minus the 63% in cost of goods sold, that leaves us with 37% left. So of that 37%, that's where profit and expenses will come in. So the question is, how much profit margin do you want to run your business? So our goal for our business model is to run a 10% profit margin. So if you take 37% minus the 10%, that only leaves us with 27% in operating expenses, right? So you have revenue minus 63% in cost of goods sold. Then we have expenses, and then our goal for profit margin is 10%, right? So that leaves 27% for operating expenses. Now, to make expenses a little bit easier, we break them down into 3 different categories. You have people, so payroll. You have marketing, and then overhead. So the easiest ones to really categorize things are payroll and marketing. So if it isn't payroll, then it's not payroll, right? Payroll is pretty simple. It's how much you pay people, including contractors, not agents. Number 2 is marketing. So if you are marketing for lead generation or agent attraction or whatever, that's marketing. Everything else is overhead, right? So those are your 3 different categories. And general rule of thumb is you're going to probably spend roughly 10% in each. 10% in marketing, 10% in pay people, and 10% in overhead. And when I'm saying 10%, I'm talking of your top line revenue. Hey, while you're watching this, I'd appreciate if you could like and subscribe, but I want to give one really, I'll say, clear call to action here. Is I make this because I have learned a ton of lessons the hard way. And I want to help you so that if you're a team leader growing a business, you can do it faster and more profitably. So the easiest way to get an inside look on us running our business outside of just watching this is to get on our email list. I give the most information there other than our free community. So we have 2 communities built out. We have one that is totally free and one that is only for team leaders. If you're looking to learn how to grow and scale and use the same blueprint we have, I have an offer for you. So join the email list and let us know you're a team leader, and I'll give you the link to that. So how I run my business, our goals for each one of these, and we're going to create a budget. So we create a goal and a budget of where to get to. So of the 27%, we break that down into 9% towards payroll, 10% to marketing, and 8% to overhead, right? So as long as those are our budgets. So if we did $1 million in revenue, let's say, we would have 9% of that. So 90,000 would go to payroll, 10% of that would go to marketing, and 8% of that would go to overhead. Now, what happens with most team leaders is they don't have these as budgets and they just spend as they see fit. And this is why most teams are not profitable. So what has happened so far this year is we got very clear on what we want our margins to be. And the best part here is the lower you can get your cost of goods sold, the bigger your expenses and your profit margins can be. So what we've done so far this year is we've operated about a 9% payroll, about a 10% marketing, and about a 10% overhead. However, we've grown revenue pretty significantly. As I mentioned, we went from 10 to 6 in the last, we'll be way over that in the last 3 years. So in 2 years, we've gone from 2 to 4, let's say. So we added $2 million in revenue. But the problem was we were way overspending in the first place. We were way over our budgets, which is why we were running a business that didn't have a profit margin. So now we have these budgets in place so that as the business grows, we can increase our budgets. So for every $1 million, so knowing that these are our budgets, 9% payroll, 10 in marketing, and 10, or rather 8 in overhead, knowing that these are ours, we know that every $1 million in revenue that we add, or 100,000, it's all relative, right? So every $1 million in revenue we add, we can add another $90,000 to payroll, 10%, $100,000 to marketing, and $80,000 to overhead, and we'll be right on budget. And that means our profit will also grow the same amount by 10%, or $100,000. So that right there, that easy, simple formula. And if you're not a numbers person, maybe it's not easy and simple, but I feel I'm pretty good with numbers, and I just didn't learn this when I started my business. So if you're a real estate team leader and you don't understand margins, I would highly recommend you don't do anything outside of your normal working hours. You probably still have to sell. You have to do all those things. Outside of those, you take the time tonight, go back and find the earlier episode in this podcast where I talk about financial model and margins, because that was the number one biggest lesson I had to learn in order to run a business that was anywhere near profitable. And if I had done that from the beginning, I would have grown my team very, very, very differently. And I say this now, I'm looking over at my spreadsheet here, or my deal counter, and we have right now by far the most pending we've ever had. I just sent a screenshot to my group chat. We're about to cross over 100 deals and $100 million in sales volume. I am filming this on June 3rd, and we have 34 pending escrows, which is the most pending we've ever had for $30 million. So we've closed 100, we have 30 pending. And when I woke up this morning and checked this, we had 24 pending escrows. So that means we've opened probably 11 so far today on a Tuesday, or this week rather, on a Tuesday. So I hope this was helpful. It was very short, very simple, to the point. This is me reminding myself that it is okay to grow your budgets. as long as your revenue is growing and as long as your profit margins and you're in your budget. Now, I'm going to make this longer. I have why this is important. So earlier I mentioned that I lost a lot of money because I didn't follow this, right? So in the beginning of my career, I was way overspending on my budget, right? That was way overspending, spending 4 times too much on everything. Now, what's happening now that I'm realizing, I made this mistake last year, I've talked about this in a recruiting episode, was as our budgets have increased because revenue has grown dramatically, I was used to spending a certain amount. Like, say for example, on recruiting, I am used to spending $5,000 a month on recruiting, and I know that $5,000 a month is going to give me 6 to 8 agents per month. And what is happening now is, as we are growing, our marketing budget is increasing, and I'm not used to spending $10,000 a month on recruiting, right? We've tripled revenue. So really it probably should be more like 15 grand a month on recruiting. So, and why do I think that we have not increased our recruiting level? Like, for example, we still recruit the same 1 to 2 agents every single week with our team. Why hasn't that increased? Well, it hasn't increased because our budget hasn't increased, right? The budget allocation has not increased. So why would it just magically increase over time? It's not. We know, just like lead conversion, that if we generate more leads, we move it through the funnel, we're going to recruit more agents. Just like if we bring in more leads, we're going to set more appointments, or we're going to do more deals. I mean, it's not rocket science. The major reason we're up as much as we are is we have $20,000 added to the marketing budget because our marketing budget has increased. We have added in a ton of extra content that has more deals, more leads coming in. And from our referral partners, we have 4x lead flow from our referral partners. So no wonder we're doing more deals. It's not a surprise to see this. It is like, just what should be happening is happening. So this is me reminding myself that I did this last year, where I was like, oh, we don't need to spend more money on recruiting. And we actually peel it down, right? We were growing in revenue and we peeled this marketing budget down. And for almost 6 months, our recruiting was like, whoa, what happened? Why aren't we bringing on agents? It's like, well, duh, we weren't spending as much. And now same realization is that revenue is increasing and I'm not used to spending this much. And I'm using recruiting as the example, but it's all the way across the board. Here's another really good example is when I was spending way too much money before, we were spending $25,000 on Zillow, and we were spending $10,000 on Google pay-per-click. So $35,000 on marketing for leads, let's say. And here we are, fast forward, and then we were doing like $1 million, $1.5 million in revenue. And now we're doing 6, and my budget is still pretty close to that 35,000, right? And we're 4 times bigger as far as revenue goes. So one, that's how much I was overspending before. Having said that, right now I'm realizing, like, well, shoot, that budget just is going to keep increasing because that is our marketing budget. So as revenue increases, it is okay to feel uncomfortable spending that much money, but as long as it's in your budget and it's on pace to hit your profit margin goals, that's what business is all about. So that is how I'm getting myself used to increasing those budgets, those spends, as long as it's inside of the budget, we're still hitting our profit margin. And I'm saying all of this, that we are above our profit margin goal so far this year, meaning that we are now finding where we want to deploy those resources, because money's a resource, into growing the business more. So that's the episode today. Like I said, this podcast is specifically for team leaders, and I'm sharing my lessons so that you hopefully don't have to learn them on your own. By the way, if you want to get a closer look at this, make sure you join my email list. Link is in the description below. And this is another episode of me sharing the growing Onyx Homes from start to finish. And I'll see you in the next one.